Hey there, guys, it's Bobby here back with another video. So, for today, we are about to go into another lesson, which is support and resistance versus supply and demand. This was one of the most asked question in the Telegram, so just I just thought that let me just make a video and break it down for you guys so that you guys can repeat and understand it better. Moving on. So, without going much further, first, don't forget to like, subscribe, and also show some love in the comment. And don't forget to join the Telegram group, link in the description below. So, without further ado, let's go. Let's get into it. So, this lesson today, again, it is about support and resistance versus supply and demand. This is a two different thing, two different approach if you want to go into trading, and you can use both at the same time. There's no problem at all. The first one is called SNR, that's a short form for it, and another one is called supply and demand, which is SND. So both of these, people are using it to navigate the movement, the price movement in the market. Where is the price gonna go higher? Where is the price gonna go lower? What are the levels that they want to see when price reaches in the market? The reaction is gonna be. So that's why this level is this four things: support, resistance, supply, and demand. Why this thing is important? Because you can navigate yourself in the market, either whether it be in short term or longer term. You can clearly see the market move uh, to in favor to those area. So let me just move things around first and make a nice clear example here. Okay, as we all know, market does not move in a straight line, right? The market move in waves. We call this a wave. So there's ups and downs, up and down. This is called, high lows, high low. Those kind of basic stuff. So people are thinking, what are the levels that we must look at? So we learn as people know, there is a basic term such as resistance becoming support. For example, right here, let me just turn that into pivot. There's another, like here, price when it breaks out, it comes to retest this area. It breaks out, it comes to retest the previous high. Well, actually, this is support and resistance. This is actually a resistance, and then it becomes a support. This is actually a resistance, then it becomes a support, right? That's what most people already know, but they're still confused, like, what is this compared to support and resistance? This is actually support and resistance. This is over here. This support right here was actually a previous resistance level. That's how you see the market. And just a basic, what are the demand, what is supply and what is demand? Okay, in the market too, we know when market moves, it move, there's are some moments where it move, there, like, in ranges and doesn't move much. This is what we call a corrective move. And then there's an impulsive move. This is an impulsive move, a long, strong momentum move to the upwards. This is what we call impulsive move. This is what we call a corrective move. So what is, demand? What is supply? What is supply and demand? Supply and demand is actually a moment before an impulsive move, the start of an impulsive move. If an impulsive move start from the bottom, then that bottom is the demand. Okay. When an impulsive move start from the top, it goes downward with momentum, that's the supply level. So from here, where is the demand? We can mark it with a zone like this. This is the demand level. Why this is demand level? Because again, demand level is a place where the start of an impulsive move. It is the start of an impulsive move. So later on in the market, when the market start to retrace back to this level, we can expect a reaction here going upwards, similar to it reacted right here. Okay, similar to when it reacted right here. So both can be used in the market. Okay, and even over here we can have a demand level because this is an impulsive move, right? So just to differentiate supply and demand versus support and resistance, support resistance is a level you can see in the market where the price might test go higher and lower from that level. Supply and demand is a starting point of an impulsive move. That's the difference, okay? That's the difference. Okay, let me just clear this up, and we're gonna directly go into the charts, a real chart. Okay, for you to, this is a tip, okay, for you to easily identify for you to easily identify support and resistance, you can change into line chart. This is a candlestick chart. If I move closer, this is a candlestick chart. We can change into a line chart. Line chart is one of the most easily readable chart and most understand by people out there, so you don't need to interpret much. You can just look at the price now and that's what you see, okay? So how to mark support and resistance? So we can, if if you already changed to line chart, you can just take a line here, horizontal line, and you can start drawing lines where you can draw lines where the price stop moving. Okay, for example, price stop moving higher from here at this level, you just mark it there. Okay, let me change this to gray, make it a bit thicker. Okay, oops, that's where price stop moving, right? You can paste it right here, draw a line right here, because this is where price stop moving lower, this is where price stop moving higher. You can do it right here, and you can keep on going, whether it be at a smaller scale or a bigger scale. Okay, you can just like make some lines here, like this line here, we can just make it here. We can do it here also, and another one here, do it here, another one here. You just keep on going. There's like multiple lines in the market. Okay, let me just stop right there. So what we just draw is a support and resistance level. This support resistance level, when price move, it reacted at this level, whether it be later on in the market or in the short term period. So for example, when price move up in the beginning, it touches this area, right? Both of this line, and then again it touches this area, and again it touches this area. You see, when price touches multiple times, when price touch multiple time at one area, that's a good indication of a strong support or resistance, because right now this is a resistance. Price reached the level and it rejected, price reached the level, it rejected, and when price break out, it start to move higher. See, even support and resistance can be broken. Okay, so when price starts to move higher, price start to move higher, and it start right here, it start to stop. Okay, so this level that price retested before, it tested before, price come back down and it touches back the same area it once previously rejected, even though it's not at the perfect place, but we know this is the area that we can mark. So sometimes people mark support and resistance, they don't use line, they use zones. For example, this resistance right here, we can use some box and make some zone. This zone, I'll make it in blue, is fine. So this can be a support and resistance zone. Okay, this is a resistance zone. We can make it right here, make some lines here. So we know price did come to this level, similar to this level here. Price touches twice, and previously it was a resistance, right? So we can mark it like this. So this is a support and resistance. Similar to this, price rejected before, so we just mark it with a line, with a zone, and again price rejected the same zone, because we cannot have a line that is precise. We know nothing about the market, so we can just look at the similar level in those area. That's what we call zones. In those zones where price might react within the support and resistance. So this is the basic, a basic of how you can start charting support and resistance. So right now, based on the current price movement, You see why people are calling for the 47K, 45K, 40K levels, because there is a previous support here. So people are calling for, oh, Bitcoin doesn't break the previous resistance, so it might head lower to this area. No, that is not an indication that price will go to 40K level. It doesn't. But what it indicates is, if price goes to that level, we can expect a reaction there. That's what support and resistance meant. Okay. See, for example, right here, price stopped moving higher here, right? But then again, it retested. It came back. It comes down and then it came back up. Price rejected the area, even though it breaks out a little and still goes back down. So we can mark the level right here. We can mark it with the zone. Again, price come back 2 years later and retested the same area, even though it breaks out a little bit, it still are struggling to go back up. So this is what we call a resistance area. Okay. So this is the basic of support and resistance. We're just gonna go it through, delete everything. I hope you are able to understand. If you are not, then just head over into the Telegram group. Ask me question. My name is Bobby James. I'm in their Telegram group. I'm super active there. All right, now we're gonna go deeper into supply and demand. Again, what is supply and demand? Let me just make a quick note here. Supply and demand is a starting point of impulsive move. Okay, it must be impulsive move. It must be an impulsive move. Oops, that's too small. That's too small. All right, that is a supply and demand. Okay, starting point of an impulsive move. Okay, from here we can use candlestick chart. As usual, people always use candlestick chart. So I hope you remember this. Supply demand is the starting point of an impulsive move. Support and resistance is just the area where price react before it goes higher or it goes lower. So again, supply and demand, starting point of impulsive move. It must be impulsive move. All right, let's move into the chart. Well, before that, if we just look into one chart, let me just change into another chart. Let's look into Ethereum chart. Ethereum chart. Okay, real quick. All right. So from here, I want to look. I want to find and I want to mark a support. Sorry. I want to mark supply and demand level. Okay, where is the supply? Where is the demand? It's super easy. Super easy. How can you know where is a supply? How can you know where is a demand? So first, you need to identify an impulsive move. What is an impulsive move? Impulsive move is just a strong move to the upside or to the downside. That's an impulsive move. It's just a strong move with momentum. Okay, it doesn't matter whether it be up or down. It must be a strong move. So for example here, when you look at this candle here, this is an impulsive move. See this big candle, this is an impulsive move. So what is the supply demand? It's a starting point of an impulsive move. So you take the box here and you can mark the starting point of an impulsive move. Okay, this it's the starting point before an impulsive move, so you mark it there, and right now price retested the same level. That's why it's important for you to know how to mark this level properly. And again, how can you know a supply level? As you can see, this is an impulsive move down, right? This is an impulsive move down. So we can just take a box here and mark where it started. It started from here. And right now, as you can see, price test the same level and it struggled to go upwards. So let me just write it down real quick. This is a demand level. This is a demand right here. And this is a supply. See, supply is when there's a bunch of supply in that area, so price start to sell off, and demand is there's a bunch of demands in that area, so price start to go higher. And in fact, you can draw it a little bit smaller if you want, because we know this is an impulsive move, so we can just really make it lower into this really, really, really starting point of the strong impulsive move. It started all the way from here, go up even higher, and start the impulsive move upwards. So this is a big chunk of demand lower here. That's why price didn't even able to close below, and get rejected twice with a strong wick to the upside. So yes, that is the basic of supply and demand. If you want more example, you can check it. Like for example here, this is a strong move upwards, and you can just mark the level below. It doesn't mean that price will go down and test the demand. Doesn't mean that. It is just, you're able to see, okay, if price go lower to this level, we might get a reaction. That's what we are doing. Okay, we are not here to predict, we are here to assess the situation. That is one of the most important thing as a trader. You don't predict, you assess the situation as the price start to move. So for example here, we did like shorten the demand. We can even like make the supply even smaller here to become more precise, just as like this is where the starting point of the big sell off. This is where price start to react again. So yes, that's the basic of supply and demand. I hope this example is clear for everyone. And actually, if you're really mastering this basic of support, resistance, and supply demand, you can use it anywhere. Not just crypto, even stock market, even futures, meme coins, any other thing that is involved in the financial market, you can use it as always. So I hope this cleared things up and it helps a lot of people. If you're new to this space, feel free to practice and DM me so that I can, look into your homeworks and I can assess whether you're doing great or you can improve more. So that's all from me. This is a great lesson for those are new in the space. I hope it helps everyone here. And yes, as always, there's no financial advice in this space. It's just full of lessons. And don't forget to subscribe, join the Telegram, link in description. That's all from Bobby. Ciao.